Welcome to Stock Talk with Nico Criticos. Today we're going to be going through 3 stocks I'm buying in the month of September 2021. And just keep in mind, I am not a financial advisor, so please do your own research, make your own investing decisions. However, let's get started. First one on the list is Analog Devices. This is a semiconductor chip maker, and they have a market cap of about $93 billion. PE ratio of 37, and that's not too bad considering how much this company is expected to grow. So we can see last year they did $4.91 of EPS. This year they're expected to do $6.42. Next year, $7.28. So fantastic growth there, as well as 30% revenue growth this year and over 40% revenue growth next year. So great numbers there. If we look further into their PE metric, we can see that a forward PE of 23. That is very cheap considering how much this company is expected to grow. And in the past, their trailing PE has been between 35 to 45. So that's one reason I bought this stock. Another reason I bought this stock is because they pay a dividend 1.6%. Nothing too special, but still it's something. And then if we look at their balance sheet, we can see that let's see, as of last quarter, they have a healthy balance sheet, 21 billion in assets, 9 billion in liabilities, so a little over $12 billion of equity, which is healthy. And then we have, based on 13 Wall Street analysts, the average price target is $189. And I bought this kind of thinking that if the stock shot up to 190, let's say, then I might sell. And if it goes down, then I'll buy more and I'll feel safe because I feel like in the long term, this is going to be a well-performing stock. Now, the other thing is we know that there is a huge chip shortage happening right now, and that is expected to go away sometime next year in 2022. So when that happens, then they should realize all of their revenue, all the money they could be making will come in. And the thing that initially got my attention with this one though is if we look up Analog Devices and their Maxim deal, we can see that what came out last week was, let's see, was that the revenue they were supposed to get later on. So see how it says Analog Devices expects Maxim deal earnings boost to kick in earlier than expected. So that's good news. That's why this stock is going to be worth more this year. And so we'll see what happens with that one. If it shoots up another 15% or something, then I'll probably sell it. But if not, and it goes down, then I'll buy more. So either way, I feel okay with that one. And next up, we can see if we go to insiders, we can see, let's see. So insiders bought this in July 2021 when the stock was around $165 a share. So that's another good sign. If we look at other investors, we can see that a lot of these high-rated investors are opening and increasing their positions all around this $165 mark. So that's another good sign. And there's that one. Next up on the list, we have the Boston Beer Company, ticker symbol SAM. This is a stock that is $532 a share. And I'll show you my positions in all these after I'm done explaining them. But the thing with the Boston Beer Company is that if we look at, let's say, a one-year chart, we can see that during the pandemic in 2020, the stock went on a huge run. It went all the way up to over $1,300 a share is the 52-week high. And the 52-week low is $510 a share. So we're pretty much at its low right now. And if you compare this to where it was before, we can see that right before the pandemic started, this was around a $380 stock. And so now the stock has come down considerably off of its highs. And I just feel like the risk to reward profile here is very attractive. And this is another one that I would not be surprised if it dipped a little bit. It could go back down to 500, maybe 450, something like that. And if that happens, then I'll buy more shares because the Boston Beer Company they originally started Samuel Adams in the 80s, okay, which is a popular craft beer. Then we have Twisted Teas, Angry Orchard, and we have Truly. Now, the big reason the stock has been falling in the last couple of months is because sales for their truly hard seltzers were down. And so the word now is that hard seltzers are not going to be popular anymore, and that's going to hurt the company. Well, I don't think it's going to be that. I think they're overdoing it with that. I don't think they're going to be going out of style that much. So not that big of a problem. Now, this is a relatively smaller company compared to other big alcohol companies. The market cap's only 6.5 billion. And I think other companies like Heineken or like the Bud Light companies, they are in like the $40 billion range. So this company has plenty of room to grow. Then if we look at what type of revenue and income this company has been doing, we can see that over the past 4 years, this company has grown very fast. 2017, they did 863 million in revenue. In 2020, they did 1.7 billion in revenue. So that is what, pretty much a double up in revenue in the course of 3 or 4 years. So great numbers there. Then if we go to their PE ratio, we can see that forward PE of 21, very low. 21 is not bad at all. And they're expected to grow revenue 24% this year, 10% next year. I would not be surprised if they did more. I'm thinking maybe more like a 15% or 20% revenue growth. But the two big products they have coming, well, they just came out with a drink this month. I forgot what it's called, but let's see. They had a new drink come out this month, which is this Bevy Long drink, which is inspired by the national cocktail of Finland. So there's that. But the two big ones are their cannabis drink coming out in Canada. So we have that, as well as they partnered with Pepsi to come out with a Mountain Dew drink next year. So those two things, I'm very excited to see what happens with that. And let's see. If we go to, so on this website, they have, based off of 13 Wall Street analysts, the average price target is $661 a share, which is 22% upside from here. And then if we go to what insiders are doing in the company, we can see that they pretty much, a lot of them have been selling in this $1,100 to $900 range. Over the past couple of months, not much has happened, but I don't know. I feel like it's a very good risk to reward profile. Now, if you want to see my full explanation, you can watch this video right here on my channel, and I go in depth of why I'm bullish. But on to number 3. The third stock is Scotts Miracle-Gro. They are one of the biggest companies for fertilizer products and lawn care products, market cap of $8.1 billion. And it kind of has a similar story to Boston Beer Company in the way that over the past, let's say, the past 9 months, the stock has gone from $250 to $144. It's down 6% today. So it's trading pretty cheap at a PE ratio of 14. And this is another one that pays a dividend of 1.7%, forward PE of 17. And if we look at their revenue and income growth, we can see that 2017 to 2019, it was pretty steady. 2020, we had a jump because everybody was going out and buying products for their house. So there was that. And that's why, if we look at what they're expected to do next year, we can see that EPS and revenue is expected to drop just a little bit, somewhere, negative 1%, which is not a big deal because coming off of that huge increase in sales they had last year, that makes sense. But this company owns, well, let me show you. This company owns some of the biggest brands. So we have Scotts, we have Miracle-Gro, we have Ortho, we have Roundup. They have all these popular, why is it doing that? We have all these popular brands, okay? And if we look at the revenue and EPS growth for this one, we can see that over the past really 6-7 years, revenue has gone up, EPS has kind of gone up and down, but I just feel like the stock has come down so much. I don't think this company is going anywhere. On this website, they have a price target of $224. And I think this is the one where, as we can see, from the time this stock was $200 all the way to 176, they had 15 buys from insiders. So that's a good sign, considering the stock has dipped another 15% and we're down to $145 a share. This is a very attractive play. So that's why, if we look at my Fidelity account, we can see I made small positions in all three of these: Scotts Miracle-Gro, Boston Beer Company, and Analog Devices. Ever since I bought Analog Devices last week, it's gone straight up. So we're up, 4%. And then Boston Beer Company and Scotts were down a little bit, which I'm fine with, because if those go down, let's say Boston Beer Company is 450, then I'm going to buy more. And if Scotts Miracle-Gro goes to, let's say, 125, somewhere around there, then I'll buy more of that one. So those are my three stock picks for September 2021. They're all trading at good deals. Just make sure to do your own research, because I'm not a financial advisor. And if you have any questions, comment below.